Good day, everyone. Today is Friday. It is June the 3rd. And this is the Moneyball Morning Report. We've got a midday motion in play that's got our cues from the trade yesterday. We put a strangle on yesterday. And what the strangle does is actually give us an opportunity to make money on both sides, just so long as on either side, just so long as the price action moves. So we bought this for about $1 yesterday. It is now $1.40 or so, and it could easily give us just a little bit more. It is coming into a frontline area of support where traders are going to start trying to bring the support action in, and we might just take profit off of the put side and see what the call will bring us, because there's quite a bit of motion there that we could capitalize upon. Also, the SPY is treading a little bit of water, but we are going to do just about the same thing. We're going to take off one side of this position and take the profit as it sits and wait for the rest of the market action that we are proposing to move in any general sense. We've got the VIX lifting just a bit, and so that makes me think that we could easily have a little bit more downside action, but we'll be in a recording very soon and do want to answer a couple of questions, but the day is so compacted right now with trades that I will answer the questions in a dedicated Q&A after the market is over. I'll be able to answer a few of those questions. I'll put it up in this space. So for right now, things are moving very nicely in our direction, and we'll learn more about that in the option masterclass coming soon. All right. Take care, everybody. Stay alert.
So I'm turning off the audio and I'm opening up Benzinga Pro here because Anne-Marie gave an important update this morning. And I really want all of you to see this. This is going to give some great context for what we're covering in today's session. Today's session is titled Fast Money with Next Day Expiry Spreads. What in the world does that mean? I'm sure some of you know. But this is real-time stuff, a real-time example of it's called a strangle that we put on yesterday on the Qs, and she gave us an update this morning. So you should be able to hear this. Let me know in the chat. Make sure that let me know in the chat that you can hear me okay and that you can hear this video okay. All right, so I'm going to go ahead, play this. I'm going to make this full screen and play this video for you.
Good day, everyone. Today is Friday. It is June the 3rd. And this is the Moneyball morning report. We've got a midday motion in play that's got our cues from the trade yesterday. We put a strangle on yesterday. And what the strangle does is actually give us an opportunity to make money on both sides, just so long as on either side, excuse me, just so long as the price action moves. So we bought this for about $1 yesterday. It is now $1.40 or so, and it could easily give us just a little bit more. It is coming into a frontline area of support where traders are going to start trying to bring the support action in, and we might just take profit off of the put side and see what the call will bring us, because there's quite a bit of motion there that we could capitalize upon. Also, the SPY is treading a little bit of water, but we are going to do just about the same thing. We're going to take off one side of this position and take the profit as it sits and wait for the rest of the market action that we are proposing to move in any general sense. We've got the VIX lifting just a bit. And so that makes me think that we could easily have a little bit more downside action, but we'll be in a recording very soon. And do want to answer a couple of questions, but the day is so compacted right now with trades that I will answer the questions in a dedicated Q&A after the market is over. I'll be able to answer a few of those questions. I'll put it up in this space. So for right now, things are moving very nicely in our direction, and we'll learn more about that in the option masterclass coming soon. All right, take care, everybody. Stay alert.
All right, can you all hear that okay? Hopefully you could. But that was just from a few minutes ago on inside of Benzinga Pro. Anne-Marie was posting an update on one of the trades that we put on yesterday. And you can see if I scroll up here inside of Benzinga Pro, that's where she posted that long strangle on the Qs, because we expected the market to either go up or go down based off of today's economic numbers. So we'll dig more into that during this session when Anne-Marie is on here. But I'm not seeing anyone in the chat really. So please let me know that I'm not just talking to myself here. Let me know that you're ready to learn. Give me a number 1 in the chat if you can hear me loud and clear, and that you are ready to learn. Awesome. I see Patrick, Nikhil, fantastic, Roman, Williams. And just, you know, there are 2 different chats that we're operating right now. So if I say one name in one chat and another name in another chat, then that's why. Awesome. Nokia, Steve, Irene, we are good to go. And so just so you all know, I mean, Anne-Marie is the expert, right? I'm the host guy, but I did take this trade yesterday with this strangle. I just did one of them instead of three of them. And I'll just zoom in here on this. And I'm just kind of trying to warm us up to this idea of this doesn't have to be rocket science. You don't have to be an experienced option trader to start to wrap your mind around some of these ideas that can give you a statistical probability of being more likely to win, right? So I'm not the expert, Anne-Marie is, but I don't have to be, because she gave us the context of the entire market. We had a catalyst today, which were the non-farm payrolls, the economic numbers here. And by the way, I could have found that on Benzinga Pro as well on our economics calendar. If I zoom out here for a second. So we can see on our economics calendar that we had our non-manufacturing PMI that came out, as well as our non-farm payrolls, and the results were right there. So that's what we were looking forward to today. We knew that this catalyst was coming. And then in preparation for that, Anne-Marie was telling us, well, we know that it's probably going to go up or down. We don't know which way. But with this thing called a strangle, which she taught us about on our last session, you could buy a call and buy a put and make money on either side of the trade. So we'll probably show you today a little bit more about what that looks like and how that played out. But basically, this was it right here. We bought June 3 expiring today, 317 calls, and we bought, this terminology is wrong. It wasn't sell to open, it was buy to open. So there we go. Buy to open June weekly 317 calls, and buy to open June 3 weekly 305 puts. Cost you a little over $100 for that, for each set there, each strangle. And then the target, you know, if the charts really started moving, you could make up to $200 or $300 per trade there. And then right here within the chat, she gave an update this morning. And now we have a form where you can fill out questions. If I click on this form here, anyone can do this inside of Benzinga Pro. You just fill out this form with the question, and then she covers these questions every day on her, what we call the Moneyball updates. So I just wanted to give you guys that update before Anne-Marie got on here, some of this product stuff, and anyone can access this right now at pro.benzinga.com. I see X-Ray in the chat, Gerald, Patrick and Nikhil were already in there, Gary, Unique Music, fantastic. So yeah, let me know, what are you guys trading today? Are you trading the ETFs, the indices? Are you trading specific companies? We had some great interviews on, it might actually still be going on Benzinga's YouTube channel today. But what do you want to talk about today? Hey there, Anne-Marie.
Hi, how are you?
I'm doing well. I just kind of got started a little bit early because I wanted to give context to everyone where you were posting your trade updates inside of the chat, where they can ask you questions inside of the chat on Benzinga Pro. And I just kind of warmed them up a little bit on the strangles that we put on yesterday. And I'm sure we'll cover that in deeper details. But how are you doing?
I am doing well. It's very busy because not only do I have the strangles going on with us in Benzinga, my strategies are a little bit more complex. So I have all kinds of things going on today into the expiration. We do know that the jobs numbers came in really nice. They came in really, really well. And so you might be wondering, well, if they came in well, why does that mean the market is going down. And it's going down because the jobs number is the one thing that Powell has been using as his Geiger counter for how far he can push the market with these rates. And so that really is what we're looking at here. So when something like that happens, we get a pretty good explosion of price in one direction or another. And this morning we've had a fade, but the market's slowed its motion. And when the market slows its motion, we end up having a little bit of price compression. And when price compression occurs, the options come in. And so what we're looking at is price action that's really going all over the place, but really going nowhere, essentially. And so that would be the one place that we don't want to have a strangle do, but we've had our strangle be as high up as 45% return, all the way down to where it is right now, which is a little bit around break even. So what would we like, what do we want to discuss today? How do we want to go to the beginning in terms of, sorry, I asked a question and then started yammering on top of it. That's not a way to ask a question. All right, go ahead.
Well, just for the people who are joining us that weren't able to be with us on Wednesday, I figured we could show them a similar risk profile of what it looks like to buy a call and buy a put, what we were hoping would happen, and then maybe seeing where we're actually at right now. I know I closed out the put side of that Q strangles. Some people might still be on it.
Oh, okay. Very good. I love that you took that initiative and did that, because it is sitting right near an important support level, Jonathan. So
thanks.
Good job. Very, very good. Yeah. So now what we're looking at is, and let me take the screen and let's go to the risk profile for this chart as it sits. Let's take a look at the Qs. Right now we had this, so I think we bought it a bit more than where it's sitting right now, but you should be actually up doubly, because if you closed out the side, Jonathan, that means that the call side is going to start lifting little by little. So let's put this rounded about where we had the entry point. It really came in a couple of pennies below that. But again, when you buy a strangle, you want to think about, well, why do I want to do that? Sometimes it doesn't make sense. See, if you buy a Tesla strangle and the volatility is 157%, then you're going to pay a ton for it. So it's got to move a ton before you make any money. So when it's cheaper, you get to make a little bit more, a little bit faster. And so here's what we've got going on right now. So the reason
I'm sorry, is it possible to zoom in? I think Mag Daily.
Let's see. I think what I need to do is take a quick snapshot of it, and then I'll put it on top of the picture. So
sorry to cut you off there.
Oh yeah, no problem. We do want to know what this is.
And to answer Vanek's question in the YouTube chat, you can't post in Anne-Marie's chat in the chat room right now, but you can click on the link to ask questions. That's just so that everyone can access the time-sensitive content very quickly. So if you have any suggestions there, let us know, but it's not broken. It's locked down on purpose.
All right, so let's see if we can see this. And what I need to do is share, new share. Let's see what I want. Screen. Yes, okay. So now I'm going to share the screen, and this is the option that we're looking at. Expires today, 317 on the top side, 305 on the bottom side. And we bought it for about 110. Now the highest this put side was up was much higher than this number earlier, and now it's flattened out a little bit. So what I want to show you is how you can plot an actual option price. And that's going to help you in a lot of ways. So watch this. So we're going to go back to the chart space, and how you plot an option on Thinkorswim is you hover over the ask one. The ask is always going to be on the right-hand side, always. It's going to be on the left if they're puts. You're going to have puts over on the left, calls over on the right, but within those columns, the buy side or the ask is always going to be on the right. And so you're going to right click that, and then you're going to see a drop down menu, and you're going to choose the one that says quick quote. And then you're going to go to toss charts, and you're going to open it up. You could also go copy with a click and then go to charts. And wherever your chart is, you can then go into the box and then do Control V, which will give you that put. Okay, and so this put is going to propagate. And it's going to show you that, if you look down here, let's take a look at the 15-minute. Okay, this was at its peak, $1.60. Now, here's the wonderful thing about options. You can plot them, especially SPY, Qs, IWM, Bank of America, the ones that have millions of shares traded every day. You can plot those just like this, and you can analyze them exactly the way you would a regular stock, because it begins to move like a stock when it's moving around. So here it is sitting at about 93 cents. It's bounced pretty high. The high was 167 today. And now it's faded and it's trying to bounce again. So my thought is, hopefully, oh, Jonathan, I forgot to tell you, Spencer Israel's last days today, known him for years in the morning sessions. And so they asked me to come on at 5 of, and so I'm working against that clock, said yes. And so, all right, so, okay, we got it. All right, so from that, we can see the Qs still have some opportunity to bounce a little bit to the north. And I really think it's because people are hoping that this is a bounce zone, but it hasn't really proved itself out to be one yet. And every single option you see me put into the chat box or into my stream there in Benzinga Pro, it is based on what is price action saying, because I want to share with you what price action is actually doing so that you can understand why I position the options the way I do in the time that I do it. And we can look here at the daily chart. And my thought was, hey, listen, tomorrow we have the employment numbers. So the chart will either hold, collapse, or expand. The one thing we did not want it to do was hold. And what it's trying to do is hold. So not the end of the day, but what we are going to be looking at is, let's go back to our Analyze tab, what we want to see the chart actually do, and how, if you choose something like a strangle and the market becomes very volatile, you can make money on both sides of the equation. And this is what we are attempting to do here, to make money on both sides of this formation. Price action is currently here. No, price action is currently 305. Yep, it's right here, sitting on this edge. Okay, so either it moves a little bit more and then the put side starts to take off, or it moves a fair amount and the call side is going to take off. Now, here's the great thing. What we are going to do is we are going to take the put side off first and leave the call side on to see if the market bounces, because every single day this week, we have reverse direction. If we were going up in the morning, we turned around and we went down. If we were going down in the morning, we turned around and went up. And so I am expecting that this kind of volatility stays with us, and we might have a shot at seeing that upward pressure. But the reason we take a strangle is because we want to make money on either side or on both sides, dependent on what price action is actually doing. And so we did that for the Qs, which really is doing really fairly well. And the SPYs not doing as well. Oopsie, let's get these butterflies out of here. What the SPY is doing is not having as much success. So this is why we always have a stop feature, right? So our stop feature is 35 cents. And so because we only took, well, we took 3 of these, we're going to, if this stops into our stop edge, before it starts doing what we want it to do, the 35, 65, 6 threes, or 18, it'll be about $190 that we have at risk, right? But as you can see with the motion line, there's a great deal of reward sitting on the edge of these if the price action does what it's actually supposed to. So let's take some questions about mechanical motion, let's talk about mechanics so that folks can understand a little bit more about the strength of process here, because it's not, listen, every single trade isn't going to do exactly what we want it to do, but over time, because we have such a robust process, our price action is going to give us upward returns from our portfolio perspective.
And yeah, and I've seen, like, obviously nothing is promised, right? But there's been so many days when the market has been down and you think it's going to stay down. And then within the last couple hours of the day, they're just these monster moves. So someone with a lot of weight is throwing their weight around and pushing those prices back up, right? So and so how does earlier today in your recording, you mentioned the edge around 299. But then we could see prior prior support
Mhm.
on the cues, like short-term support over the past couple of days around 305. Why
Uh-huh.
were you looking for it at 299 instead of 305?
Okay, so I wasn't actually looking at 299, and you can always tell that by where I position the strikes. And so, yes, 299 is the floor, but when I built the puts, I have 305 there, right? So the
Right.
position is 317 call side, 305 put side. Now, if it came into the 305 and failed, 299 would be where it went to, it would go to, and we would be able to really see this turn into, a potential 5Xer, 7Xer. But 305 is where this is what you'll see when you go, okay, what's she really thinking? Look for the strikes. That's where you see that edge. So what I should have done is really taken that that put side off when it was running off of that rail up at the 140 area. I just thought, I know they're trying to buy it up. We've just got a ton of negative pressure. And so if they get above this area at 306.50, we're going to sell the puts that we have and see if the call side will run up for us, because the put side is really still fairly expensive, right? We still got about 80 cents sitting in that. But if it doesn't lose this line, getting back down to the 305 and losing it is going to open up the money train. If it happens, again, it's that space of Moneyball that says, okay, the probability is that we come into 305. For me, I should have said, you know what? We need to close half of these or two of these or whatever. I just didn't, because I have way too many trades going on for all the things that I have going on today. And so just a lot of things going on. So that's my excuse bag.
Well, this is great though, because I think for the newbies on here, right? So there's some context here. Like we already spent last time talking about the risk profile and everything, but now you can see it on the price chart here of how we don't know. We don't have a crystal ball, right? But we can tell where the support and resistance levels are either way, whether it breaks out to the upside or to the downside. And so when it comes down like this, for someone who's still in this trade, right? Basically, would you then just be kind of waiting it out until this afternoon to kind of like, what are our different lines of action this afternoon, depending on where the price action goes?
Perfect. Okay, so here is my supposition. I have negative trend. So negative trend implies that bounces into resistance will fail. It doesn't mean that they always will, but they could. They fail. So my thought would be, I expect negative trend to continue, especially if I lose 305. So now the question is, all right, what do we do? So we have two things working against us. Today is the actual expiration of the option. So the closer that we get to 4 o'clock Eastern, the more likely it is that how fast price moves is going to be how fast the option price moves is going to be a variable of how close it is to the strike. Now, why is that? So let me see if I can do a paste here again. Yes, let's go right back to that option. Have a peek. Here it is. I'm going to take out this Study for now. All right, we're just going to look at what's going on from a motion perspective. That put bottomed out yesterday, and this morning, it's been on the rise the entire morning. It's obviously in some kind of area that looks like it could fail, but buyers are coming in. And remember, because it's a put, it's going to look opposite to how the Qs look, right? So if the Qs go down, this is going to go up. If we're looking at something that's a call, so let's look at the 305 call. All right, so the 305 call, price is going down this morning, so the call is also going down this morning, right? And so you can see it holding here, but it's very close to the actual price of 305, so it's not really dancing around too much. Okay, so let's go back to our put, and we'll talk about what we need to see happen here. So if we say, hey, listen, I'm closing this position out. I don't like that it's losing this area. I don't want it to lose any more than that. And you say to yourself, all right, I'm done. What that means is when we get back to here, we can see it is 305 is now 88, 87, right? And you can go, all right, I'm done. And what you've lost is just 20 cents per strangle, 30 cents per strangle, all right? That's not a lot of risk. And so one of the big things we want to do always is balance risk with reward. And that is a very key measure of how price action should move. So if we're going to sit here and say, hey, listen, this is all we're going to do. I don't think the price action is going to bounce anymore. And we're going to continue downward. We know our stop is at 35, but we can always stop it out early from these spaces because it's not behaving the way it should, because we want it to be above this moving average right here. Traders are doing their very, very best to try to lift price, as you can see from this up. So that's really what they're trying to do. They're trying to hold this edge. Here it is breaking up. This is the region that I said, hey, listen, if we get above here, it's going to be a place for the price action to say, hey, you know what? We are going to be moving to the upside, and I'm going to take my position off of that put. Right? So we're sitting here, we need to wait until the end of this candle closes. That's really, I mean, we could jump now, but it's always best to wait until your candlestick formation closes, because here's what we know. Every single time we've come into this price, it's sold right off. So we have no idea whether it's going to hold this time or not until it closes over that range. And so here we're at the do or die for this particular position, because now my premise is, listen, this is going to take longer than I would like for it to take to clean down or up. And so we're going to watch this 15-minute. If it closes, then we'll go to our Analyze tab and we will say, you know what, I'm going to close out my position here. Instead of at 35 cents, I'm going to close it out at 60. And then we leave it right there from that perspective.
And so that kind of answers Gary's question in the chat.
Mm-hmm.
When are you closing your puts? So Gary, right now we're waiting to see, is this candle gonna close above 305?
Yeah.
Right. That's what we're looking for, because that's going to tell us basically where the momentum is to go back up or not.
Exactly. Exactly. We want to see if this thing closes above 305.90, right? And it's sitting here at 306.50, but every time it's been up here, it's sold off. So let's just see if it sells off and closes below this area. If it closes below this area where my cursor's moving back and forth, we know that there's sellers still trying to push this down, right? You could look at a tighter time frame, but sometimes tight time frames give you too much information. And remember, we're in a digital world, but we're really just analog creatures. And so less is always more for us to mechanize the flow through. The biggest thing that a trader needs to worry about when they're trading is, what's the most I can lose? So if your mind is constantly focused on managing the risk, not being a Chicken Little and, oh, it's moving there, I got to get out. That's not what managing risk means. Managing risk means orchestrating a trade, realizing what it looks like when you're wrong and what it looks like when you're right, and be willing to wait until you're proven out to be wrong or right. And this is what we're doing right now. We're using the 15-minute to say, this line in the sand right here is the number to watch. If we close over this line, the chart is going to try and grind its way back up into the VWAP. And it could, but everybody's been selling here. And so just because it pops over the edge doesn't mean it's where you take the trade off.
And then, so if it does continue to move down,
yes,
at that point, at what point would you close the call side of the strangle?
Okay, so the call side is only worth a couple of pennies right now, so you let that expire.
Okay.
Because it'll cost you more unless you are with unless you are with a program that allows you to do it for free if they're under 2 pennies or whatever. It's going to cost you more to close it than it's worth to have. So you just let it expire. So what you're trying to collect is on the put side. So here's the thing. As it comes in, we've got 1 minute left here. As it comes in, if it closes over this top, then the first thing that we do is say, all right, let's go in and close the put side of this formation. And what would that give us? 64 cents, 66 cents, something like that. Let's see what gives. To me, if it closes underneath there, I'm going to give it another shot to break down. Right? Because we do know that when a trend breaks by time and not price, it has a tendency to move back into the direction of the trade. So here it is trying to bounce up over the top. And we'll see, this is good. This is mechanical motion. Here it is closing over the top. So let's watch for this fade action. And here's what we'll do. We'll cover it right here. We'll say we're out. So now what I have to do is, hang on 2 seconds. I have that on another platform. I'm going to close this right here. All right, so what we're doing here is we are selling that side, the 305. It's going to be 58. All right. Okay, now I need to, let me take a look at this picture one more time. Yeah, we're all right. Close. So now let me put this in my spreadsheet because it's covered. You're probably going to get a better, a better price on it. You might get 62, even 65. If it comes into that zone. Sorry, that's taken a long time. I gotta let this in here. And then where are we?
So I guess this is another lesson for the newbies. I mean,
Yeah,
you've been doing this for years, and you keep track of every single trade.
everything, every single one.
Dave is asking, how much did the strangle cost?
The strangle was $1. We still have the call site sitting in case the market bounces. And right now, oh, it's back up at 67. So now that I'm going to post it, people who are getting it on the edge of this, let's see, here's Benzinga. Oops, log it in.
And I think just for everybody in the chat who's talking about the small print, I think I didn't want to interrupt Anne-Marie because she's closing a trade right now, but I think we can do it where we just share one screen instead of the whole desktop. And so, and once this is done, we can change that. But notice how right now she's posting in the Benzinga Pro chat with her channel. So if you have access either to a free trial or to the essential plan, you have access to these trades, the opening trade alerts, the closing trade alerts, and her daily updates on the overall market and these trades. So you can see there's a lot more on here, but this is how you can follow along with Anne-Marie's trades. And it's something that I learned just while she's typing this out is be sure to use limit orders when you're following Anne-Marie's trades, because even a few seconds can change the situation, or especially a few minutes. So you can execute a trade, but then let it come back to you, because you don't want to chase and ruin your entry point, because many times it will come back to you and give you that favorable entry that you were looking for.
All right, so now we go to SPY. Gonna do the same thing here with the 408s. Let me take a picture of this SPY right here for 1 sec. SPY 410. Yep, that is doing the same thing. All right, let me go close that. Give me 2 secs.
So basically you're closing, we actually put on 2 strangles. We've been talking about the Qs this whole time, but they're actually 2 separate strangles, one for the Qs, one for the SPY. And now she's closing the one for the SPY.
Okay, so that one just went at 40. Oh, great. Everybody's going to get a better price than me. That's fantastic. All right.
And then Warren was asking, it appears you use Hekinashi. Do you use it exclusively?
What?
I don't see it anywhere.
No, I don't use Hekinashi at all. I believe that those are terrible candlesticks. And they're terrible candlesticks because they flatten actual price. Very often you can look at a Hekinashi candlestick and it will show you a price or region that the chart never even printed. So no, I don't use those, and I think they're dreadful to use. But that's only because my style is focused on actual price action And yeah. So that's it. Okay, I need to share here to this, and let's go to the chart action and see now what's going to happen to our calls, because this is going to be pretty exciting if the call side ends up really lifting like we expect it to on Fridays. Okay, so that is going to be super interesting. Jonathan, if you want to talk about a couple of different things, I am shifting around a few other things. I've got some big put positions floating, and I've just got to make sure I've got my stops and everything set up on my other trade action events. So maybe even take the screen and show everyone whatever else. Did you see everybody got to see where they could send me questions, right?
Right. So I'll just zoom in here while Anne-Marie is handling her live trades that she has open. And you can see here, this is the chat tool. This is where even just now, Anne-Marie just posted these closing trades here within the chat. So you would have access to that. And then for everybody if this is your first webinar with us, be sure to watch the previous one from Wednesday. It was a great breakdown of how to use risk profile charts to understand your risk versus reward here. So just to recap, we opened these strangles by buying calls and puts that expired today. Our bet was that it would either move to the upside or to the downside significantly. We just closed out these puts, and these calls are still open because we're still waiting to see, is the price action gonna move back up going into the close? Don's asking, when Anne-Marie posts, is there any way to turn on a sound when she posts? We're working on that, Don. Actually, as of right now, usually I post a yellow bar here at the bottom of Benzinga Pro. I need to work. I'm trying to get like push notifications and that type of thing going. Right now it is only visual. So I'm still working on that. Please do me a favor, and inside of Benzinga Pro, please leave your feedback through this upper right corner little feedback button and say something about sound alerts or notifications for trades from Anne-Marie or other notifications on the chat. Dave, those strangles were purchased yesterday afternoon. So this was, you can see the opening trade alert this is from, let's see here. This was from yesterday morning. And then the trade alert was yesterday afternoon, opening trade alert on the Qs. So that is when these were activated. Frank is asking how to do a profitable trade day before expiration. I understand this can cause a problem with gamma. Frank. Yes. So it just depends on the catalysts at play, right? So it depends on the volatility in the market. And so in this case, we had a volatility event, or we that was our bet, that there would be a volatility event because of what we saw on the economic calendar. We had the non-manufacturing PMI, we had the non-farm payrolls, and we expected volatility based off of those numbers. If you didn't expect that volatility, then you could use a different situation. Like, yeah, there's other types of structured trades that you can do in that case. And Anne-Marie might have more insight in terms of gamma than I would. X-ray, how much is Benzinga Pro? there is a link right here. I'll post this in both chats. You can get 35% off of our annual or monthly plans today. And so that would be $912 for the whole year, or $115 a month instead of normally it's $177 a month or $1404 for the year. So yeah, you can join that. There's a 7-day money back guarantee on all of our subscriptions. And as you can see, there's a lot more on here. Active professional traders have been using Benzinga Pro for years to get fast news, scanners, other types of research to improve their trades. And so you can see, I could just look up the Qs or the SPY here, and then I could switch over to the chart tab. And then I can choose something like the 5-minute candle or the 15-minute candle, like we were looking at on Thinkorswim, to immediately see what's going on with these ETFs or stocks.
Okay, I'm not muted, right? But you're still taking care of that. So I'll just talk in the background here for a quick bit. If you take a look at a 15-minute chart on the Qs or the SPY from what it is that we are looking at, what we want to notice is that it's struggling to move north, but it is moving to the north. And so that's something you can look at and say, oh, okay, now I think I've got a pattern formation that could very easily give me what I want. And so far, we are moving in the right direction for what it is that we want to do. So I'm going to give it back to you, and then just finish up a last couple of things. I have 2 or 3 trades left to close, and then I'll be right back.
All right. So yeah, this is looking at a 15-minute candle on the Qs, and then I can switch over to the SPY here. Looking at the 15-minute candles on the SPY. So you can see how they're still trying to really break past this 411 area on the SPY. Going back and forth, but overall it does seem to be moving up. It's a little more obvious on the Qs. And so, yeah, basically you've got Anne-Marie's trades in here. You also have access to other ideas from Benzinga Pro members. So we have some interviews on our YouTube channel. BZ Day Trading, it has some really good day traders in there. And they're all Benzinga Pro members. On these other channels, Swimmers, that brought in a bunch of users from Thinkorswim, and they trade off of Charlie's Squawk. So if you're looking for the fastest audio news, you could turn on that Squawk. And that covers things that would affect the overall market as well as individual stocks. So Anne-Marie tends to trade more liquid symbols like the ETFs or mega cap stocks, but we cover a full range of catalysts here on Benzinga Pro, all the way down to the microcap biotechs and all of that fun stuff. And then there is the ideas tool as well. So if I open up a new workspace here, I can open up that ideas tool, and you will find Anne-Marie's trades here in the ideas tool, as well as other Benzinga Pro members and Benzinga staff. So the whole idea here is to post a clear thesis, price targets, holding period, and a stop plan. What happens if it goes against you? And so you'll get some great ideas here for individual stocks as well as options within the ideas tool. You'll recognize some of these names. Mitch hosts a lot of our YouTube shows. Christian is on our support team. Aaron is one of our video producers, and they're talking stocks all day. They get a lot of good insight from all the guests on their shows and just looking at these charts day in and day out. And then anyone who has an expert here, we actually need to add that for Anne-Marie. I don't know why it doesn't say expert next to Anne-Marie's, but For anyone who says expert, these are people who publish newsletter picks for us. So you don't even have to pay extra for that. It's included here. You get, Gianni DePoce is bullish on PAG, and he gives you his thesis, his stop loss. And here he doesn't have a target sale price, but he did give you a stop loss there. Yeah, William, that code that I gave everybody, that includes monthlies. So you could purchase monthly or annual. You just save an extra 34% if you do purchase the annual plan. Let's see here. Just trying to clear out some of this spam on the YouTube chat. All right. So in terms of what today's topic is on, fast money with next day expiry spreads, right? This is an overnight trade that we did. We knew that it was going to end today, no matter what. So we've done other trades. Anne-Marie does post other trades. Like I'm still in on some commodity ETFs or a like range resources. That's out a few months potentially. But this is just a quick overnight trade. It's going to go down or go up. And we knew what our risk was going into it. And we knew that potentially if the charts really move, we could make a significant return.
All right. I think that I am okay for the next couple of minutes. Thank you so much, Jonathan, for just pulling everything together. Oh, I keep forgetting you guys see me live. You've got me things.
Oh, the suspense.
Okay.
I think on the video, if I'm talking, it doesn't show the other other speaker.
Goodness. Well, I have a very scary face, my kids tell me, when I'm thinking through things. But let's talk a little bit about what you want to do as the price action moves forward. Now, there's a brand new trade that you could take on right now, if you are so inclined, and that would be going to the Qs and anticipating a bounce. And let's say you say to yourself, all right, I'd like to put $100 at risk, and $50 is all I am going to have really at risk. So if you want to do that, you can go to the Qs because it's moving with quite a bit of action. And you can go, do you want me to take the screen again?
Sure.
Okay. Share screen. Here. Okay. So you want to look in the SPYs and you want to look at the 3 June 22 expiration. That's today. And you want to look on the call side and you're going to see that the 310s are going for 37 cents. And if you buy 3 of those, you'll be exposed to the tune of about $106. Okay, I don't even know what that number really is. What is it? $116, $112, whatever. So you could say, hey, all I want to risk is $50. Well, what I want to do is see if I can turn this $100 trade into $150. So you're either going to lose 50% or make 50%. Now, this falls well outside of the thought process of people that go, hey, listen, risk reward needs to be X, Y, or Z. All right. When you say risk reward stuff, to do it in the option chain on an option that expires today, I don't really think that that's wise. You're going to get stumped out, or you're not going to find something, or you're going to wait until it's too far away or whatever. So right now it's going for 32. So you could buy 3 of these. Let's take a peek at this price action again. Okay, I think it's still okay. Let's take a look at this hourly. It's slipping a bit. All right, let's let this 15-minute candle do. That's the SPY. Good grief, Anne-Marie. You're insane. Okay, here we go. Yeah, we're good. So let's go back here. If you haven't pulled the trigger yet, if you go, hey, I'm just going to do this one time, see how it works. It's $30 right now. You buy one of them, you can add two if you like later. But your goal is to get between 50 and 100% of this price action here and have it turn into a reward for you. So you could buy these calls up at 310. Is the price going to go to 310? Maybe. We don't care. We want it to get to maybe 307 and turn into 50 cents rather than the 30 cents that we bought it at. And you can turn that around and see that. Okay, so if you're looking at something like that, that's the quick trade that gets you up over resistance. You know it's likely to go to the VWAP. It's running pretty hot. It's going to expire quickly, so there's very little motion there. That every tick up that it moves in and closer to your actual amount is going to be better for you, and we're expecting that it'll go from 30 to 50. Okay. So that's the trade. You want your stop to be 15 cents, right? And that'd be great if Jonathan works that out with you. Remember, what we do is try to make decisions in controlled environments, and we play a probabilities game. Every single trade isn't going to be a great one, but it's very interesting that people get really hopped up if trades make 300, 400, 500%, but they're not really thinking about the real meat of the work, which is how do I manage risk into the next area of reward? And how do I look at a formation and go, okay, my bet is that this moves to the north. At the time we closed the put, buying that call would have been about 15 cents. But we wanted to wait to make sure that it was moving in the right area. It's up almost 10%, because remember, we're looking at small numbers. So if it went from 30 to 34, it's already 10% higher than it was a moment ago. Okay. And so what we're watching it do, let it hold the price. Don't ever take a trade that's going to make you nervous because the size is too big. You want your mind to be very strong and capable of hanging on when you need to think something through. And so that means you don't jump the gun and you sort through that process. So the goal is, no matter what, when it gets to 307, you cut and run.
And a quick little example here is, so I pulled open my phone. I use Thinkorswim's mobile app, and so you're calling that out, and I set a limit order for 30 cents. Oh, it didn't fill. It didn't fill, and now it's at 35. But I was like, I'm not going to chase it this time.
Yeah,
I'm gonna. So,
but you see the point exactly. Yeah, you see the point exactly. Now, what you want to do is, if it moves up enough so it's almost there at that 307, you want to make sure that you pull that order, because the entire shift of motion is going to be different.
Yeah, sorry, right? Can you repeat that?
Okay, so if you have a good till cancel order and it comes in to your stop and then moves, it comes in but doesn't quite catch you and then starts moving, if it gets to the target and starts pulling back, don't buy it. Because right. It's already missed that cycle that you planned on that 15-minute space. But you can see it moving up. We know what's going to happen. Now, it'd be a lot nicer for it to go all the way up to 317. I'm not sure it's going to do that, right? 317 is still only 2 cents, but it could get to 8 cents. It could get to 15 cents. And in the meantime, the 310 keeps running. Now it's up almost 30%. Right? It runs like crazy. Now, what might be fun for us to do one Friday is this kind of trading in that live space where we can show how it runs, where we can move in, where we can move out, and where it makes sense to actually take that position.
Awesome. And since we're live here, let's see. Are you sharing? Yeah, you're just sharing.
I have to be on that Benzinga midday thing to say bye to
all right.
Spence. Yeah.
Well,
all right.
Thank
Take
you.
care.
And
see you soon. We'll chat.
Right.
Okay.
Thanks, Anne-Marie.
Bye.
I'll go ahead and share my screen again. Well, there you have it, everybody. From Anne-Marie herself. She was really sharing some great stuff with us today about live trades. I mean, if any of you, if you're new, it's kind of scary, but do it on a paper trading account and do it with fake money. Get used to executing those trades on a paper account. You don't have to use Thinkorswim. You can use any brokerage account that has paper trading, but get used to executing those trades. And if you had taken those calls on the Qs just a couple minutes ago, you'd already be up 30 or 40%. Granted, you'd have to be okay with losing the 50% if you set that stop. But that's exactly, it was based off of the price action. So that's what's important here. We're using price action, volatility, volatility catalysts like the economic numbers from today. So whether you're talking about a strangle overnight or just a naked call, like we just did with the Qs, you could use either one of those to make some quick money. And we're being realistic, right? We tell you up front, like you can lose money. With any trade, you can lose money, but it's about the probabilities and putting things into your favor. Noel, we were talking about the Qs. So that's an ETF. And then the SPY, another ETF that follows the S&P 500. And you can see how both of these came down quite a bit. And then they've been moving up over the past hour or so. So I look at the SPY, I look at the Qs. I could just bring up two details tools here. I'll just look at both of those at the same time. And I'm switching this over to the chart here in 15 minutes. So there, side by side there. I'll zoom this in a little bit. And wham, wow. Yeah, it's been moving up quite a bit. All right, thank you. Thank you, everyone. Thanks for being here. Let me know if you have any other questions. I'm going to post that link one more time for 35% off of Benzinga Pro, posting that into the chat. Use that link for the annual or the monthly subscription. So that is good through tonight. And then if you have any questions, you can contact me directly. I'll throw in my email and my phone number there. So just reach out to me directly if you need any assistance, making sure that's correct. Bada bing, bada boom. All right, so we'll stay tuned for more from us here. And then remember, all you have to do is sign up and then you immediately have access to the chat room with Anne-Marie, with her live trade alerts, and as well as those daily updates on the overall market and how that affects your trades. And then keep an eye out for this little form here, because you can click on that form and then ask her questions that she'll cover each day. And then last but not least, I'm going to click on that link that I posted for all of you and share that right here, because this is what it looks like when you click on that link. You go to our checkout page. It has a coupon code pre-applied. And you can see here, if I get my Zoom stuff out of the way, you can see here that it says $117 a month. That's the base price for purchasing annually, or $177 a month. That's the base price for purchasing monthly. And then if you scroll down, the coupon code changes that to $115 a month. Or if you're purchasing annually, it changes it to $912 per year instead of $1,404 per year. And there is a whole library of tutorial videos on our help site. We have a world-class support team, and you can always access our team through this blue bubble in the bottom right corner, or you can access our help site through this question mark in the upper right corner of Benzinga Pro. All right. Thank you, William. Have a great weekend, everyone. Yeah, it is Friday, so happy Friday, and we will be in touch. Until next time, happy trading.